Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I'm Michael Bull. Thank you for being with us. Our show today is brought to you by CREI Summit 2024, Commercial Real Estate I. And what's that stand for? It's all about social media and marketing. It's an event that's happened every year, I think for 3 or 4 years, and I'm inviting you to attend. It's September 11th to September 13th, and it's in Atlanta, where I'm headquartered, and I will be there. So if you can make it, please do. I'll give you a website. You can learn more. You can sign up, reserve your space. The website is CRESummit.com, CRESummit.com. Well, we have a great show for you today. We're going to talk about one of the sectors that's been really, really hot, and that is an industrial market. And it's funny because, industrial seemed like it was, I don't know, the dirty shoe, no spec building for years and years in my career. And then all of a sudden it flourished. All our industrial clients and developers just smiling ear to ear, just doing great. And then the pandemic hit, and wow, it's even better. But then we had kind of more recent news with the market, the economy sliding a little bit, and maybe industrial is starting to fade in some areas. And then also we had this Amazon news. Let's figure out what's going on. Please welcome my guest. It's Jim Costello. Jim is Executive Director with MSCI Research, and he's joining us here on video. Jim, good to see you again.
Hey, great to be here.
Well, Jim, I like to start with this Amazon story because, it seems like they were just such a ferocious user of industrial space, and then there was a point there where they seemed like they weren't growing, they were subleased, and they were stopping projects. But then the more recent news is they're back again, and they're busy again. What's going on?
Yeah, I tell you, I think people overreacted when Amazon talked about subletting some space. Back in the pre-pandemic world, you had a slow, steady increase in online shopping as a percent of total shopping activity. It was just going up and up and up and up a little bit more every year as online shopping was taking more hold in the economy. And then it hockey sticked up during the worst parts of the pandemic when we were all stuck in our couches and had to order toilet paper through the mail and have it delivered that way. When that increased, they had to increase that share of spending online increased. They had to have more space to store goods, and leasing really took off. But there was an element to that was kind of a temporary need, because some of that spending was temporary, because once shots went in arms and people started to get back to their lives and going to malls and shopping online and changing that shift of where they were spending their dollars, you just didn't have the same kind of growth and the demand for space. So it was natural that they had to just reallocate a little bit. But now that we're done with some of the shock element of more spending online and then it kind of retreating back down, you're back to that previous growth path of a slow, steady increase every year in the amount of online shopping as a percent of total. I mean, until somebody can figure out how to email me a pizza, literally just digitally send it to me, there's going to be all kinds of growth and innovation and new stuff that happens with online shopping. And that share now is kind of back in the same kind of growth path it had been before. And so, it's natural that you need a little bit more industrial space to support that. So their first subletting, it was just tweaking the edges, knowing that at some point in the future they need even more. But why hold on to it for a few years if you don't have to?
Yeah. Well, you want that digital pizza come out of the wall in your living room. I think you must have enjoyed the Jetsons when you were a kid.
I did enjoy the Jetsons. It was kooky fun, but it's some of it's realistic, so much of it wasn't. We got the robot maid now. If you look at your Roomba, I guess.
We got robot maid also just sitting in your living room and getting things delivered to you. We're there except for the pizza. Right? That's what you're waiting for. Well, Jim, what about overall performance in industrial real estate? The Fed's raising rates. They want to curtail spending, I guess, and the economy. What's that do with the performance of industrial overall?
Yeah, inflation has been sticky. It hasn't come down as quickly as everybody's hoping. But the challenges there are kind of tricky. There are two elements kind of keeping inflation up in the most recent inflation release. The things that really punched above their weight: shelter costs, just the cost of housing, and the insurance cost actually for automobiles. Those are the two things that really had an outsized impact on inflation. How do any of those impact the industrial market? Not so much. So the uh, keeping interest rates higher, keeping the Fed funds rate higher for a bit, and not really loosening. That's that would be good for asset values in the industrial market if they went the other way and started cutting rates. But the things that are driving inflation, it's not really impacting it that much. The housing cost issue, part of that this is the supply is not coming in as quickly as the market really needs it, and lower rates would help drive more supply and help drive rents down. So that's a tricky issue to solve there. But the industrial market in general, right now it's still one of the bigger sectors for investors to be focused on because they see that predictable income story. That's what people are really focused on. Where do I see some sort of predictable income? Where do I have more of a certainty when I buy the asset that people are going to continue to use it? And there's still some of that with the industrial sector.
Yeah, it makes sense. It seems like most every group that we work with that buys investment properties, like, yeah, we buy hotels, but we'll also buy industrial. We buy retail. We'll also buy industrial. It's like it's on everyone's shopping list, right? What's that doing to cap rates for industrial?
Yeah, it does make it a bit of a crowded trade, but the cap rates, they are going up. I mean, even if you have investors interested in the sector, and even if you do have income growing, when you have the 10-year Treasury go from 60 basis points to 4.4%, something like that, depending on what day you're watching this, it's hard to get away from that. And now cap rates and interest rates don't move on a one-to-one basis, but they run, and it impacts the cost of debt. And investors thinking about these things think about the rate of return relative to other asset classes. So it does tend to move up, but it hasn't gone up nearly as much as interest rates because income is growing. And if you have income growing, that helps keep cap rates down. So the simple average of cap rates across the U.S., I think it was like 5.4% at the low point in 2022. And in April, we're up to a simple average of 6.1%. So it's gone up. And over the last year, it's gone up 60 basis points, but it's been kind of flat in recent months. Most of the increase over the last year was really in 2023. It's a little bit more stable of late. And with the some stability in cap rates and income still growing, prices are on the rise. Our RCA CPPI, that's a same store index of price growth. That was just a little bit above 5% for the industrial sector in April. Now, 5% is not great relative to some of the history where you're closer to 10% per year kind of price growth. But when other property sectors are still seeing falling prices, it's nice to be in the asset class where there's still some price growth.
Yeah, absolutely. There's big smiles on the industrial groups these days. And, Jim, since I have you on the show, my audience would be upset with me if I didn't ask you your opinion on interest rates moving forward. I know you don't have a crystal ball, but you're tracking the economy. You're tracking why the Fed does what it does and how it's impacting the economy. And what do you expect for the end of the year as far as rates?
If I could forecast interest rates, I'd be a very wealthy man. But I could talk about sort of the forces driving it.
Okay.
Simple fact is that when we had the 10-year Treasury at 60 basis points. That was great for commercial real estate investors at the time because you could get cheap debt and you could start making some investments that way. But that wasn't good for growth overall. There was a reason rates were so low. There just wasn't demand for capital. People weren't investing in their businesses. People weren't investing for growth. And so you saw money that was looking for any kind of home being diverted into things that at times, I mean, some of it got into, the tech world in ways that just didn't deliver much of a return. There was just a little bit of a hope that maybe it would deliver something because I can't find any good opportunities for investment elsewhere in the economy. The higher interest rate environment and the higher rate environment overall, some of it is because of inflation, but some of it is also because there's just more competition for that capital for growth. And long term, I think that's a healthier thing because if you have firms investing for growth, that's going to mean that you're going to have tenants, and because those firms have to live someplace. If they're investing more for growth in their business, let's say they're making batteries, say they're making tires, whatever, just some industrial thing. That's a great thing because now suddenly you've got potential industrial tenants.
Yeah. So you expect rates maybe to stay fairly stable through the end of the year, if you had to guess?
Through the end of the year, the issue that had been driving rates up was just more inflationary pressure. And there's two things driving that inflationary pressure, right? Insurance costs and shelter costs. Shelter costs, there's not much that can be done there. It's kind of hardwired. We've had a couple years of strong growth in rents, and that's just slowly, finally finding its way into the shelter costs. Insurance, we saw some big increases recently, almost like 20% year-over-year changes in insurance costs in this stuff going into the inflation index. I'm not sure that that's fully been rolled through as well. That might take some time to roll through there. So we're probably in those two categories that have been having an above average impact on inflation. It's probably going to be there for a bit. How long? It's hard to say. But that will create a situation where there's still some pressure to not suddenly cut rates. Will the Fed cut rates? Then we also get close to the election, and I think if anything, I'll say one thing about politics: if I was at the Fed, I wouldn't want to be anywhere near this upcoming election. And so, whatever they do, they might be looking at that to say to be sure that nobody tries to think that they were supporting that guy or they were supporting the other guy. Just whatever they do, they just don't want to get involved in that. So that's an element that we probably have to start thinking about as well.
Yeah, it's something we try to stay away from here politics as well on this show. There's great shows for political shows, right? This is a commercial real estate show. So before you leave us, Jim, what would you expect then for the industrial market moving forward for performance?
We saw deal volume fall in April relative to where it was a year ago. It was down like 15%. It's still one of the most heavily traded asset classes, though. And even at the level, it was like $4 billion of deal volume for April. That's still high relative to what we saw in the period before the pandemic. So it's still an elevated pace of activity. The headline numbers showing declines in deal volume. There's some negativity in that, but prices are growing and deal volume is elevated relative to history. It's still a popular investment sector. One challenge that investors trying to look at the sector face is that if they can't find the right asset, they may want to build it, but the cost of building is going up like many other things with that inflation. So that does also protect you from new competitors to some degree.
Yeah, I think it's still a great time to sell industrial. Any listeners out there want to sell leased industrial or vacant, really, please give me a call. Jim, thank you for joining us. Great information as usual, sir. Thank you.
Hey, great talking to you.
All right. Well, thanks, Jim, for sharing all that with us. And thank you for joining us. Thank you for sharing the show. Thank you for connecting with us. And until next week, be sure that you always lead, learn, and laugh. And join us for America's Commercial Real Estate Show. America's commercial real estate show is brought to you by Bullet Realty. For commercial brokerage sales and leasing in the Southeast U.S., contact our show host by email at michael@bullrealty.com. By Commercial Agent Success Strategies, 21 incredible one-hour agent training videos. Learn more at commercialagentsuccess.com. And by Lument. For senior housing, healthcare, and multifamily financing, visit lument.com. For more podcasts and videos, subscribe and visit creshow.com.